What's up, YouTube? This is Yemi speaking from SwingTradeFX. First of all, I want to appreciate you guys for the feedback on the last videos. I really love the fact that you guys found the video so helpful. And yes, this is another video, and we're going to give you guys another very, very insightful lectures on trend line trading and how to apply it effectively in the forex market in contrast to what you've been seeing on the internet. So you guys should have a seat ready and let's ride in. Thank you. Let's go. So guys, let's get straight into it. So to start with, the first thing we want to know is what are trend lines? That's the first question we'd like to understand, right? So I love to define trend line as diagonal supports and resistances. Now, what do I mean? We are always aware of the trend line as area of either we always know about the market of area of support, turn resistance, horizontal area of support, resistance. For me, I love to call the trend line diagonal supports and resistance. So when the trend is going up and is touching the spots, all the spots right here, right here, right here, this is the diagonal support. In the case when the trend is coming to the downside, right, and it's eating, key levels right here, coming back down here, this is what we call the diagonal resistance. So I would love to call the trend line diagonal support and resistance, which are useful in the market. So yes, so the next thing we want to understand here is what are the types of trend lines. So what are the types of trend line in the forex market? Types of trend lines. So we have two major trend lines basically. We have two major types of trend line basically in forex market. So the first one is what we have the bullish trend line. We've got the bullish trend line, and we have the bearish trend line. We have the bearish trend line. So the bullish trend line, right, could be classified as the uptrend, while the bearish trend line would be classified as the downtrend. So what is the example of a bullish trend line? We have when price is moving, to the upside, just like this, touching the trend line just like this and keep moving. In the case of the bearish trend line, we have a situation whereby price is forming into a resistance for the trend line and it's moving to the downside, and it keep moving to the downside. So these are the two major type of trend line that we have actually in the forex market. So the next thing we want to understand here is, now that we understand what trend lines are as diagonal supports and resistance and the two type of trend line that exist, what is the next thing we want to know is we want to understand how do we draw a trend line correctly. Just with everything that is on the forex market, actually the trend line also has its own principle. So how do we draw a trend line correctly in the forex market? It's quite very simple. It has a very simple principle to it. So I'm going to use an illustration to explain to you guys how to draw a trend line. So let's say this is a trend right here, and this is a price. This is a trend that market is moving, and the trend started right here. It touched this point for the first touch. It touched this point for the second touch. and now it's touching this level for the third touch and for the fourth touch, and it keeps going on and on. So there's a simple rule of thumb to drawing a trend line. The first thing I want you to understand is that we have three phases. We have key indicators that we want to see before a trend line is valid. So number one, price must touch this point right here. So let me highlight it a bit. Give me a second. So the first thing is price must establish the first touch. So the first touch is what I usually refer to as the initial touch. Okay. Then the second touch right here is what I refer to as the trend establishment stage. And the third touch right here is what I refer to as confirmation stage. So this is a confirmation, the trend confirmation stage. So this is the point where you go ahead and you buy the trade from, and the subsequent ones that comes later on are also opportunities for you to buy. So as a rule of thumb, what does it mean? What you want to see right here is very simple. Number one, make sure you have price touch the first trend line. It gives it a second touch. This is what confirms it. And make sure now that finally price now touches the third trend line and you can keep buying from here. And the same thing applies for the case of a sell. So I'm not just going to be teaching you guys alone. I'm going to be showing you guys real life examples. I'm going to be showing you guys real life examples of how these things works in the Forex market. Okay. So now let's look at a real life example right away, because I just don't want to teach you. I want you to see it, because seeing is believing. I believe from my experience of teaching, this is the best way for you guys to understand it. So now let's go to the live chat. Okay. So let's use the USD card, for example. Let's scroll to the back. Let's look at the USD card, for example. So this is exactly what I mean right here. Do you guys see it? So let me make the trend line much more bigger so that everyone can be able to see it. So you can see right here that we have a situation right here when the market is actually making, it made a first touch right here. It made a second touch right here. And what is the next thing that happened? It made a third touch right here. If we are taking a trade off this level, we could have found a very good entry opportunity, and we could have actually take profit of this next resistance. So this is just a simple rule. Now I want you guys to pay close attention to how when price got to this place, you can see it touched the trend line, touched it perfectly, and touched it perfectly right at this point. So this is a very good way to draw the trend line, and the same thing actually applies to downtrend, right? So this does not go for only uptrend, it actually go for downtrend too. So let's look for example let's look at example of maybe like a downtrend right now. So let me take this off. So look at this, right? Let's draw the trend line, touch 1, touch 2, and touch 3. So it's the third touch is usually the point upon which you have to take your trade. So you can see right here that we have this level right here where price is finding itself. And if you had sold your trade right here and you have taken your take profit at the previous area of resistance right here, you could have equally secured some very nice 142 pips to the downside. So this is a clear example of how to draw a trend line. So let's get back to the whiteboard and let's see what we have next. So the next thing I want us to see next is what are the different variations. So we've told you that we have two types of trend line. We have the bullish and we have the bearish, and I've shown you guys how to draw the trend line with the initial stage, with the establishment and the validation. Usually the third touch of the trend line is what confirms the trend line. So the next thing I want us to talk about right here is what are the variations? Variations, which is one of the most important understanding you need in the forex market. Variation of trend line. So we have different variation in which the trend line actually presents itself, right? So there are two things actually that happens in a trend line, right? We have two variations in a trend line. So number one, when you're drawing your trend in the market, so when you're drawing your trend in the market, price either does either of this. The first one is price either respects the trend line, or secondly, price either breaks the trend line, right? Breaks the trend line, right? So actually, these two key scenarios in the market has different ways in which we can use our understanding of the trend line in our trend line trading understanding to take opportunities off of this. So let's first start with the case of when price respects the trend line, right? So when price respect the trend line, what do we do, right? It's very simple, right? Just like I've shown you example, right? All you have to wait is the first touch, the second touch, which is the establishment phase, and the third touch right here before you buy, and you take your profit right at this next resistance. So in the case of price, price actually respecting the trend line, it has the same principle, right? It's going to keep going and keep going. And to be very honest, right, if price continues to move higher and higher, and it decides to, so let me take this off. If price continues to keep moving higher, all you got to do is just wait for the next touch, keep buying again to the next resistance, keep waiting and keep buying. Do you understand? So it's that simple. Okay. So now in the case where price actually breaks the trend line, okay, we have a strategy also with that. So let me draw it out. So let's say we have a upward trend right here. So this is for illustration when price breaks the trend line. When price is moving touch 1, touch 2, maybe when price get to this touch 3, even let's say price respect it and all of a sudden price breaks it. We actually have different way in which we actually trade this breakout right here. This breakout that happened right here, we actually have different ways in which we trade it, which is what I'm going to be expatiating on the next slide. So let's get to the next slide, still on trend breaks, right? So still on trend breaks. So let's assume that, still on the variation of trend, So let's assume the market. So we have different variation to scenarios where price hits, the trend line, and I've showed you guys a live example that you have to take your profit. You have to take your entry right on the spot. Give me a second. You have to take your entry right on the spot, right? But now there are other variations again in the market, which is very important and many people don't pay attention to. So let me draw it right here. We have a situation. So let me identify this as, you buy from here, and the same thing applies to the case of a sell. So we have a variation right here also that usually happens in the market, and many people cease to take this opportunity in the sense of price disrespect this. It came back up and came back to follow it, right? This one right here, remember we said the first thing right here is what? The initial touch. We have the trend establishment. Right here, we have a failed, trend line touch right here. So there is no trade right at this level. But now, the moment that price goes back up and respect the trend line, we actually do have a buy opportunity of this chart. And I'm going to be showing you guys the example of it. So let me first show you guys this first example on the live chat, and then I'm going to show you guys an example of this on the live chat. So let's go to the live chat real quick and see what the market is doing. So now, in the case of the normal trend, respecting, right? You can see an example right here where price hit this level, and now what do we have right here? We have a situation of a sell, a buy. This is very simple and very, very straightforward. So let's look at a scenario where price actually break and respect back. So let's look at this chart right now. So we have, you can see right here, we have a trend right here. You can see touch 1, touch 2 right here, and touch 3. So let's label it out. So we have this initial touch. We have this our validation stage. We have this stage right here where price break, and this is a very wrong signal. But then you can see what our price closed back into this trend, and we saw actually a very, very good sell opportunity right here. So this is a sell opportunity. So if you had understood this, you would have actually seen an opportunity right here, and you could easily have taken your trade right here, and you could have made some very nice trade to this level right here. Means after this confirmation candlestick, you could have actually been looking at a situation where you could be making 135 pips in the market. Okay, so this is the example of the first variation. The first one is where it obeys the usual one, which I've showed you in the past. The second one is when we have a break and price now comes back to respect the trend line and keeps respecting the trend line. So you should always look forward to these scenarios in the market because they occur too often. Okay, so let's go to the second one. So let's label this as trend respect. Trend respect in the scenario of when trend respects, right? So now let's look for another one in the scenario where price does not so we have another scenario here where, say, price decide not to respect. Okay, so let's separate this. So let's look at the situation where price when trend does not respect. Sorry, give me a minute. Okay, beautiful. So let's start this as a scenario where trend breaks, right? Or disrespects the trend line. Okay, so I'm going to be giving you guys two scenarios right here when trend breaks. Okay, so the very first one is the usually the very common one. So the first one is usually the case where price give us the first touch, second touch, you can see third touch. Make sure it's touching it, right? Then fourth touch and price breaks this level right here, only for price to hit this trend line back and continue to the downside. So let's label this, right? So as at the time when price started, we're looking at this right here as our first touch. We're looking at this as a second touch, and we had a trade opportunity right here to give us a third touch, and we must have taken our profit right on this level, right? And look at what price did. It came back and gave us a break right on this level. So because we have this break doesn't mean that we might not find an opportunity. No, we can actually find an opportunity. What we simply have to do is wait and see what price is going to do in relationship to this level. So what did it do right there? Price hit that level, and what do we have? We have a trade opportunity right here. So usually, how do we trade this? You actually take the trade opportunity and you decide to sell right down to where the whole trend started from. Usually this gives us a very high yielding trade opportunities in the market, right? So you sell to this level. Now let's look for the second case scenario. Now I want you to pay close attention, right? Because they look similar, but they are not the same thing. So the second case scenario right here, and I'm going to show you guys full example on the live market. The second case scenario is a situation where price is making the touch. You can see making the touch, it's making the touch, and all of a sudden price breaks it and price comes back to this level. Okay, price comes back to this level and found the previous area of support right here. Price retested it. This previous area of support right here. Price retested it right at this level. Came back to touch right at this level. And afterwards, what the price do? It rejected right here and continue to go to the downside. So what you do here is you take your profit the same way as well, right? So now look at this. Let's label it out, right? We have the first touch right here. Give me a second. So we have the first touch right here. We have the second touch right here, which is the validation state. We have this false break right here. So we waited to see what price is going to do. We identify our previous support, turn resistance, and price came back to find a resistance at the previous support. So apparently we had a situation whereby the previous support right here turned into resistance right here, and we are able, by this resistance of candlestick confirmation, to take our trade, and we sold down to this level right here. So this is the two different scenarios. Is either trend line breaks, or is either trend line breaks, or is either trend line respect. Now, if trend line respect, we have the normal example where we have the touch one, touch two, the buy, but we have another example where price touch one, touch two, it gives us a false break and go back to the buying. When trend line breaks, we have a situation by the market touch one, touch two, touch three, it breaks and retests this trend line. In this case, it breaks and retests the previous area of support, turn resistance. So I've shown you guys this example on the live chat. Let me show you guys these examples on the live chat as well. So let's look at a situation. So let's look for specific example. Let's say the USD CHF. Let's scroll back and let's see if we can have a situation. Let's see if we can have a situation where price actually break and retest a trend line. So you're going to find many opportunities actually in the market, but it's just so ideal that I give you guys one or two examples so that you guys can see it for yourself and you guys can understand it. So let's look at an example right here. We have price eating the first touch, the second touch right here. You can see right here. So make sure whenever you're drawing your trend line, it's right on the spot, right? So now you can see right here, you can see, let me zoom it out. You see it's touching right on the spot. You can see touching right on the spot, and you can see it broke it right here, and you can see it's retesting, right? So now let us label it real quick. So in this labeling, we have the first touch right here, we have the second touch right here, and we have a situation whereby price is giving us the third touch right here. And we could have found a buy to this level. And what happened right here, after price broke it, we waited to see what's going to happen. You can see how price hit it right here. So you can see how, if you had actually taken that trade opportunity from that level, how do you take your profit? You take your profit from where the trend started, because I've actually made about nothing less than, like, this is about 635 pips. You could have easily risked about 40 pips or 30 pips as the case may be, and you could have seen explosive profit out of this. So this is an example right here. Go into the market and go, just all you have to do is follow this principle. You're going to see countless and countless of examples in the market. So let's look at the second case scenario. So let me take all of this off. Let's look at the second case scenario where price found a previous support and resistance. So let's look at the U card for example, right here. Do we have an example right here? Yes, we have an example right here. So let's label it real quick. So you can see right here the price. When price got to this point right here, you can see the first touch right here, the second touch, which is the what establishes the trend, and you can see we have a first break right on this level. So apparently there's no sell opportunity right here. But is that all? No. So we identify, we wanted to see price is going to hit the touch the trend line. It never touched the trend line. So what do? We bring out our previous area of resistance right here. So we have a resistance level right here where price has been eaten right here. What did it do right back? The moment price breaks it, look at price coming to form into a support right here. So what do? We pick our trade right here, and you can see right here that our target will have actually been this spot right. Hold up. Our target will have actually been this spot right here. Do you see it? So now, the moment you start to take your trade, you can see right here again that you can also use the trend line right here. You take your first trade right here. You can see how you can take a second trade right here. And by that time, the first trade must have hit this level. Second trade must have been on break even. Then, instead of buying everything to, just this level, this will have actually been your level of take profit on the two entries. So if you had actually bought the first trade, you could have actually made 331 pips. Second trade, you could have actually been looking to making about 249 pips. You can see how the trend line strategy is just very simple. So these are the different examples that we actually have on the market. So let's get back to the whiteboard, right? And I hope you guys are following, and I hope you guys are following through, because this is very important, right? Many people actually do not understand the power of the trend line, and because of that, they underrate those tools. I use the trend line so much in my trading in such a way that, and it gives me explosive profit. I never underestimate the trend line, because the trend line, like I said from the beginning, are diagonal supports and resistance. So the next thing I want to teach you guys now that we've understood what a trend line is, how to draw a trend line, the principle of how to draw a trend line, we've understood the types of trend line, the bullish and the bearish, we've understood the different variation in case scenario where it breaks and case scenario where it's respect. We've showed you the two examples after price respect, right? Which is number one, it either does the direct, respect, or it gives us a false break and go back to respect. In the case where it breaks, retests the trend line, or it breaks, it retests the support and resistance. So the next thing now, which is the most important lesson I want to teach you guys, is how to use the trend line to finding high probability trades in the market. So when it's all said and done, the goal as a trader is to, trade in the highest probabilities in the market. So how are we able to use the trend line to find, high probability trades in the market? So for us to get into that, I will actually link it into three different scenarios. So we have scenario one, we have scenario two, where we could use the trend line to find high probability trades, scenario three. So the first one I would love us to talk about is using. So how do you use it to find the high probability trade? Combining the trend line plus support and resistances. This is a very, 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 very important one in the market, right? The second one is combining the trend line with Fibonacci. And the most preferable is the 61.8. 61.8 P. Okay, guys. So the last one, which is the highest probability one, when you see this in the market, just know it's a high probability trade, is combining the trend line plus the support, I'm going to abbreviate this, of resistance plus the Fibonacci. Plus the Fibonacci. So when you see this in the market, just know that it's a very high probability. So let me give you guys, a whiteboard example, then we're going to go find a live example. So how do we do this? Now, let's look for an example, right? We have price. Let's say price has been moving on a higher high, higher low, higher high. It gave us the second touch, and price came back right here, and price gave us the third touch right on this level before we bought. Now, I want you guys to see something, right? This is the first touch right here. So let's say the trend was coming from, let's say this trend right here. So let me erase this off. So hold up a bit. So let's say this trend was coming back from this level and give us the touch. So now you can see the first touch right here, the second touch right here. How do we know this third touch is going to be high probability? It's very, very simple. All you're going to do is look at this previous area of resistance. Look at it right here, how it turned into a support level for prices. So the moment where this resistance right here turn into a support, now we have a double support, the diagonal support, which is the trend line, and the horizontal support. We have a high probability trade right here. You should really look into a high probability chances of the market eating your target on this one, because price is being supported by two major supports, which is previous resistance turn support and the trend line support, which is the diagonal support. Beautiful. We have another case scenario, which is the first example. And this is the most important part of this lesson. I want you guys to pay attention, because if you can understand this, trust me, the rest is going to be, a walk in the park for you. The next one I want you guys to see is this. We have a situation where price was giving us the first touch right here, giving us the second touch right here, then went back to the upside, only for price to retrace back and eat us right back on this level, and then get back to the upside. Now, this level right here usually would be a 61.8 feet. Okay, so it usually would be a 61.8 feet level, right? So this level right here, right? This is our first touch. This is second touch right here. And now we have the third touch right here. So usually when trend line actually confluence with a 61.8 Fibonacci is usually a high probability trade. And I look forward to this in the market every single time. So let me give you guys the last case scenario before we find the last example. I will complete this classes. So we have a situation where price is giving us a higher high, higher low touch right here. And we have a situation right here when price gets back to this level, then price find this level. So usually the first thing I want us to see right there is the presence of a previous level of resistance. So let me select this again, and let me take this higher right here. So we have a situation whereby price is finding, number one, previous area of resistance. You can see turn into a support right here. Now this support right here is actually triggered by this resistance turn support, like in the case of this first example. And now this previous area of support turn resistance actually intersects. So let me take this off. So this level actually intersects this level right here, give me a second. So let's say this level is actually a 61.8 fib as well. So let's take this level to be, our 61.8. So we have a 61.8 level right here. So usually this is a very strong level in a situation whereby the trend line touch 1, touch 2, touch 3, confluence and intersects the previous area of resistance turn support, also at the area of 61.8. Anticipate nothing but a high probability trade right on this level. And you know the game, you know how to take your TP at the previous resistance. And this is applicable for the case of the sell or the bearish market as well. I'm just using the bullish market as an example. So let's look at this example one after the other. So let's take it on the live chart. The first one is the trend line and area of support and resistance. So let's go on the chart. Let's look for examples, right on the chart. Let's look at the trend line. We're looking at the case of the trend line actually intersecting the area of support, turn, resistance. So let's look at the AUD USD, for specific examples, and you can always backtest in the market and actually look for scenarios in the market. You're going to see a lot of them, and the example I'm giving you a specific example that I had traded in the past. So let's look at let me see if I can find an example of this level right here. Now, beautiful. Now, one thing I want you guys to see right here is, do you see? So let's use our principles, right, to establish, this trend, right? We have touch 1 right here, touch 2 establishment, and we have what seems to be a touch 3 right here. Now, this touch 3, how do I know it's high probability, right? I look to the left and see their previous area of support, turn resistance. Now, do you see right here, this level right here, the price turned this previous area of support right here. Price on this previous area of support right here. As you can see right here, all this area of support right here, you can see right here, the price now turns it to an area of resistance. So when I want to take a trade right here, I'm looking for a high probability case scenario. So you can see the two, which is the diagonal resistance, intersect with the horizontal resistance right here, which makes it a very high probability trade. So if I've taken my trade right at this level right here, at this level of the touch, I'm looking to take my TP right here, would I have made some pips upon this bearish candle stakes? I'll put my stop loss at 33 pips, and I will have made 106 pips, which is over 1:3 risk reward. So this example, you can go into the market and look for so many examples actually in the forex market. So let's look at another example again of this. Let me take this off. The second one is when price intersects the Fibonacci. Okay, when price intersects the Fibonacci. So let's look at this, right? Let's look at an example I traded in the past. So bring out the trend line. We have this first touch, second touch, third touch, right? So we even have many trade opportunities on this pair, right? So, and I'm going to show you guys the different opportunities on this pair. So right here we have the first touch. Sorry, let me use this accordingly. So we have the first touch right here, we have the second touch right here, and now what do you see right here? You see that we have a third touch right here. So after we have this third touch, price continue to move up, we see another trade opportunity right on this level. How do I know this has a high probability? You bring out your Fibonacci tools and you bring out this level. So we have our areas of 61.8 fib right on this level. Do you see it? So what does that mean? What does that mean? It's very simple. That means this is a very strong area of buy trade opportunity. And you can see when price hit this level, you can see how it moved back up. So I could have seen a trade opportunity right here, take my TP right here. I could have seen another trade opportunity right here, taking my TP right at this level, and this would have been a very fantastic trade for me. So you can see this is high probability where trend line intersects the 61.8 feet. I use this in the market all the time, and trust me, I have explosive profit of this, and it gives me more confidence. So the last one that I want you guys to see, which is the last example. So let's go to the whiteboard real quick, and let's go and identify the fact that we've dealt with a few of them. So yeah, we have this one right here. So we've already made sense with the 61.8. Now the last one is combining the trend line with support and resistance and the Fibonacci tools, right? So let's get back to the live chat. The same example that we used, right? We can actually find that same example right here, because if I extend this to the back, right, you're going to see that what price did right here is the fact the price found the first touch right here. It found the second touch right here. Then it found the confirmation touch right here, which is the third touch. Now look at something really interesting. Price found the resistance right here. Now it turned the resistance to support right on this level. So we have previous area of resistance turned into support. And not just that, when you bring out the 61.8 Fibonacci, you can see that this is a level of the 61.8 Fibonacci right here. So let's make sense with it. That zone of 61.8 Fibonacci. Now, what does this tell us? This tells us that this level right here, it's a very high probability trade area. So let me give you one other last example. Now, you can see how we have the trend line acting as a support. You can see how we have the previous resistance turn support, and we can see how we have the 61.8 as a retracement tool to find the support. So we have three tools confluencing at the spot. Usually, I use this ones the most, and I'm always looking forward to this one the most in the market. So let me give you guys one last example, which is on the GBP JPY pair. So let's look at it real quick right here. So we have a situation right here in the market where price, was finding, a resistance. So what we have is touch one, touch two. Can you guys see it? So we have let me take it back real quick. We have a touch one right here. We have a touch two right here. We have a touch three right here. Now look at this, right? We have a previous area of support right here, turning into resistance on this level, which is the fourth case scenario right here, right here. And when you bring out this Fibonacci from this, place right here, you can see that we have the 61.8 level right on this level. So what happened to prices right here? You can see the price gave us a very, very sharp, fall right to this level. And you can see that immediately price gave us a fall directly. If we had traded our stop loss, we could have gone as much as 219 pips, and this would have been a very fantastic trade for us. So guys, this is the example I want to show you guys in the market. And let's get back to the whiteboard. And you can see that we've been able to actually identify, these opportunities in the market and use the combination of all these tools in the market. So I implore you guys to go into the market, go and look for these examples in the market. And this is everything you need. You really do not need so much. And if you need all the understanding of the market, you can see on the end card of this video, you're going to see that I made a previous video on the chart structure. You can always watch it, and you can like, you can share, and you can subscribe this content if you find it very useful. And you can see the link to my Telegram and Instagram on my channel. So thank you guys so much, and looking forward to the next class. Have a wonderful rest of the day.